A new concern following a week of mixed inflation reports. Economists are warning President Trump's new immigration policies will contribute to the rising prices of goods due to a dwindling labor force. It comes as companies struggle to absorb the full weight of the president's tariffs. And joining me now is Courtney Brown, an economics reporter at Axios, focusing on the global economy. Welcome, my friend. So, Courtney, you're right. Job market gloom hasn't been this bad since the Great Recession. And while the economy doesn't seem to have hit the roadblock predicted a few months ago, fluctuating inflation data isn't boosting morale at home. So how long until the dust settles, and where does it settle? And is this recent wave of pessimism misplaced?
This data point comes from a consumer sentiment survey regularly conducted by the University of Michigan and really closely watched on Wall Street. And it's kind of striking to think about. The largest share of Americans expect the unemployment rate to rise over the next year. The largest share since the 2008 financial crisis. It is crazy because financial conditions and economic conditions are so different now relative to over 15 years ago, right? The unemployment rate is at 4.2%, 4.1%. That's historically low. I mean, back then, the unemployment rate peaked at 10%. So the economy is very different now, but there is this underlying pessimism and fear and worry that the economy is going to slide into a recession of some kind, and it's going to lead to unemployment rate rising and make it more difficult for Americans to find a job.
So despite the gloom and doom, you also report that U.S. shoppers spent at a healthy pace in July, with June spending coming out higher than initially expected. There's a headline in the New York Times which also reads, "Stocks keep climbing past bad news." How do you reconcile these healthy levels with growing signs of inflation and rising prices?
This is a little bit of the dynamic that has persisted in recent years and started in the Biden era. Consumers feeling so bad about the economy, even as economic indicators suggest that, well, consumers are still spending. They say they feel bad, but they're still buying. Inflation is ticking higher, but consumers are still getting out there and shopping. It's this weird disconnect that economists have had to grapple with. And as you say, the stock market is soaring, hitting all-time highs, despite some concerning indicators that we got this week on the inflation front that sort of suggested that President Trump's trade war is starting to rise prices. And it's not anecdotes anymore. It's showing up in the actual indicators.
Can I ask you about prices for some of the everyday goods that are already rising? Let's talk about vegetables. Wholesale prices of vegetables have soared in the last month, with officials warning it's only the beginning. Is this solely due to tariffs, or is deporting immigrants playing a role?
It's really hard to disentangle the two. There are these two huge shocks that the economy is dealing with right now. On the one hand, you have highest tariff rates that we've seen in a century, over a century. On the other hand, you have these underlying changes happening in the workforce where immigrants are being deported. There are less workers available for certain industries that rely on immigration, including agriculture. So it's hard to say which is causing it. But the fact of the matter is, you know, Americans have dealt with higher prices over the last few years, and this most recent data that we got this week suggested that prices are climbing ever more. And so I think the ultimate question for economic policymakers at the Federal Reserve is it the appropriate time to cut interest rates, especially with signs that inflation is starting to heat back up?
Okay. Courtney Brown, thank you much.